Hi everyone, it's me, Tommy. Hope you're all doing well wherever you are. I'm just here enjoying a nice cup of tea, and I wanted to chat with you all about something really fascinating and potentially important. It's something I think everyone should at least be aware of, so pull up a chair, maybe grab a drink yourself, and let's talk about Bitcoin. Now, before I dive in, and this is super important, please remember this is not financial advice. I'm just sharing some information that I find interesting, and you should always do your own research and consult with a financial professional before making any investment decisions. Got it? Great. So, Bitcoin. You've probably heard the name floating around, maybe seen it in the news. But what exactly is it? How did it come about? What's it actually for? And what might the future hold for this digital currency? Let's break it down in a way that hopefully makes sense for everyone. How was Bitcoin made? Imagine a world after the 2008 financial crisis. There was a lot of distrust in traditional banks and financial institutions. It seems that's the environment that gave birth to Bitcoin. In late 2008, a white paper, essentially a technical document, appeared online under the pseudonym Satoshi Nakamoto. No one knows for sure who or what Satoshi Nakamoto is. It could be one person, a group of people, we just don't know. This white paper laid out the blueprint for Bitcoin, a decentralized digital currency that could operate without the need for a central authority, like a bank or a government. Then, in January 2009, the Bitcoin network officially went live. The very first block of Bitcoin, known as the Genesis block, was mined. It even contained a hidden message referencing the financial crisis, which many see as a clue to the motivations behind its creation. The key innovation behind Bitcoin is something called blockchain technology. Think of the blockchain as a public digital ledger that records every single Bitcoin transaction in a secure and transparent way. These transactions are grouped into blocks, and each new block is cryptographically linked to the previous one, forming a chain. This chain is distributed across a vast network of computers all over the world, making it incredibly difficult to tamper with or counterfeit. So, unlike traditional currencies that are issued and controlled by central banks, Bitcoin is created through a process called mining. Miners use powerful computers to solve complex mathematical problems. When they successfully solve a problem, they get to add a new block of transactions to the blockchain and are rewarded with a certain amount of newly minted Bitcoin. This process not only creates new Bitcoin, but also helps to secure and verify the network. The total number of Bitcoin that will ever be created is capped at 21 million. This scarcity is a fundamental part of its design and is one of the reasons why some people see it as a form of digital gold. What is Bitcoin for? So, we know a bit about how it was made, but what exactly is Bitcoin for? Well, its initial purpose, as envisioned by Satoshi Nakamoto, was to be a peer-to-peer electronic cash system. This means people could send and receive value directly to each other online without intermediaries like banks or payment processors. Here are some of the key use cases for Bitcoin. Digital store of value. Due to its limited supply and decentralized nature, some people see Bitcoin as a way to store wealth over the long term, similar to gold. They believe it can act as a hedge against inflation and the devaluation of traditional currencies. Medium of exchange. While not yet universally accepted, Bitcoin can be used to pay for goods and services from businesses that choose to accept it. The number of merchants accepting Bitcoin is growing, although it can still be a bit niche. Cross-border payments. Bitcoin transactions can be processed relatively quickly and with lower fees compared to traditional international money transfers, making it potentially useful for remittances and international trade. Financial inclusion. For people in countries with unstable currencies or limited access to traditional banking services, Bitcoin can offer an alternative way to store and transfer value. Decentralized finance. Bitcoin forms the base layer for a growing ecosystem of decentralized financial applications that aim to provide traditional financial services like lending, borrowing, and trading without intermediaries. It's important to note that the primary use case of Bitcoin is still a subject of debate. Some focus on its potential as a store of value, while others are more interested in its capabilities as a medium of exchange and its role in the broader crypto ecosystem. What about the future of Bitcoin? Now this is where things get really interesting and also the most speculative. Predicting the future of anything, especially something as dynamic, is incredibly difficult. However, we can look at some current trends and potential developments. Increased adoption. We're seeing more and more institutional investors, like large companies and investment funds, starting to allocate a portion of their assets to Bitcoin. This increased institutional adoption could lead to greater price stability and wider acceptance. Regulatory clarity. Governments around the world are grappling with how to regulate Bitcoin and other cryptocurrencies. As regulations become clearer, it could provide more certainty for businesses and individuals to engage with Bitcoin. However, overly restrictive regulations could also hinder its growth. Technological developments. The technology behind Bitcoin is constantly evolving. Developments like the Lightning Network aim to make Bitcoin transactions faster and cheaper, potentially making it more viable for everyday use. There are also ongoing discussions about improving Bitcoin's scalability and energy efficiency. Integration with traditional finance. We might see more integration between Bitcoin and traditional financial systems, such as banks offering Bitcoin custody services, or the development of Bitcoin-backed financial products. Competition from other cryptocurrencies. Bitcoin is the original cryptocurrency, but there are now thousands of other digital currencies and blockchain projects. Some of these may develop superior technologies or focus on different use cases, potentially impacting Bitcoin's dominance in the long run. Macroeconomic factors. Global economic events such as inflation, interest rate changes, and geopolitical instability can also influence the price and adoption of Bitcoin. It's crucial to understand that the future of Bitcoin is not guaranteed. It faces challenges like regulatory uncertainty, scalability issues, environmental concerns related to its energy consumption, and competition from other cryptocurrencies. Its price can also be very volatile, meaning it can experience significant and rapid price swings. Final thoughts. So, there you have it, a little overview of Bitcoin, how it was made, what it's for, and some thoughts on its potential future. I hope this has been helpful and has sparked your curiosity to learn more. Remember, the world of cryptocurrencies is complex and constantly changing. It's essential to do your own research from reliable sources and understand the risks involved before making any decisions. I find the whole concept of decentralized digital currency fascinating, and it will be interesting to see how Bitcoin and the broader crypto space evolve in the years to come. Anyway, my tea's getting a bit cold now. Thanks for joining me for this little chat. Let me know in the comments if you have any questions. I'll do my best to answer them, keeping in mind that I'm not a financial advisor. Take care, everyone, and I'll catch you in the next update. Bye for now.